My name is Rick Anderson. I'm with CCB Data Corp., parent company to Citizens Credit Bureau. As a part of Citizens Credit Bureau's interactive credit score monitoring program, CCB Educational Services has developed a credit risk assessment and management program or curriculum for professionals such as yourself in the mortgage and real estate industry. This course is designed to be a tool for lenders and realtors to help you close more loans and sell more homes. Our objective is to give you as much information as possible to help you do that. We're going to talk about several critical areas today. These will include, but are not limited to, the challenges that loan officers, realtors, consumers are facing when dealing with problems in their credit reports. We're going to deal with just how much knowledge does the general or average consumer have regarding the credit industry. We're going to talk about the 5 factors that make up a credit score. We're also going to talk about helping you assist your clients in obtaining a target score, the score that they need to be to in order to be approved. We're also going to talk about troubleshooting strategies to help you deal with common client problems. I'd like to begin by just kind of having an open discussion regarding some of the situations that we run into on a daily basis. For example, have a client comes in, he has a tax lien. Tax lien's still being reported on his credit report. It's not even his. He's tried to get the credit bureau to remove it. He's talked to the courts. When he comes to you, he's completely frustrated because he has not been able to get this off so that he can get the funding. How about the example of my father has the same name as I do. My father had a bankruptcy a few years ago. His bankruptcy showed up on my credit reports. How many times have you encountered or dealt with people that have had similar situations where a bankruptcy or a judgment or a collection or a charge-off winds up showing up on somebody's credit report and it's not even theirs? What about identity theft? How many times do we encounter people who come in and there are things on their credit report that are not even, they have no clue where they even came from. Could have come from identity theft, could have come from just somebody with a similar name, similar address, similar social security number. Or what about maybe unauthorized inquiries? You go down to your local car lot and you want to buy yourself a car, and for some reason the next time you pull your credit report there are a lot of inquiries showing up, and come to find out the dealer that you went to wound up shopping you at 20 different banks. Or how about incorrect job, residence, or your name appearing on your credit report? Many times people go in and they find AKAs on their credit report. They find social security numbers that are variations of theirs or somebody else's social security number for that matter. In my case, where my father's credit showed up on my history a few years ago, his social security number showed up on my credit report as my social security number. Matter of fact, in the type of work that I have done over the years, working with clients, working with people that have credit issues, I have one individual that come in to see us. The guy sells real estate, and his scores have varied. When he came into us, his scores were probably somewhere in the neighborhood of the high 5s, low 6s, and we started, assisting him with trying to clean up errors and problems and things that were on his file. Just gets his scores up. 2 months later, he goes out. He's got some properties that he wants to buy. He's going to make some good money on the properties, but in the process of doing that, he winds up getting a lot of inquiries, and his credit scores take a dive again. His scores are fluctuating, in a given time frame, anywhere from 1 to 3 months. His scores will go up anywhere from 50 to 100 points at times. We're not going to give strategies right now to talk about these things. Basically, the reason that we're coming up with these examples and different scenarios, and I'm sure there are 100 different variations of the scenarios that we've gone over. What we're going to do is we're going to talk for a few minutes about just how much education people have in the credit industry and kind of find out where maybe some of the holes are and find out what it would take to find out what we need to give you so we can fill those gaps. According to the Washington Post, mortgage industry experts estimate that between 350 and 400,000 applicants are overcharged every year when lenders incorrectly label them high risk or subprime because of their credit scores. Any of you ever had to deal with that? Have you ever had a client come in that their scores were high enough to get approved, but there were still problems on their credit report that they couldn't take care of, and as a result of that, they were labeled high risk or subprime? According to the ACLU, 1/3 of all consumers who examine their credit reports find mistakes. As a matter of fact, once that information is corrected, the industry does not report the corrected errors to those who receive the wrong information. According to Walter Kurth, president of Associated Credit Bureaus, if the consumer bypasses the credit bureau and goes directly to the creditor or the credit grantor to challenge or correct information, the change of the correction will probably never reach the credit bureau. Again, there are many holes in this system that we are going to attempt to fill up. The Consumer Federation of America found that only 2% of Americans knew their credit score. 2%, and only 3% could name all 3 credit reporting agencies unprompted. We're going to take just a couple of minutes. We're going to do a pop quiz, and this quiz is designed to find out where the holes are in your knowledge base and find out what we can do to help fill those holes.